Good morning, everyone. Happy Friday.
Happy Friday.
I'm Kerri Schultz with Keller Williams Premier.
Jen Renstra with Revolution Mortgage.
And we're here again on a Friday to give you guys another market update. This time our topic is really around how to improve buyer affordability in this
It's a hot topic right now. As you know from watching the news and from everything and feeling it. I mean, inflation, go to the grocery store.
Yes.
Rates are going up. I feel like we may have leveled off. I can't really say that.
Right, we don't know, but
we
definitely
don't know, but
rates are higher.
Rates are definitely higher.
And then, the prices of homes have still stayed relatively high. And so that's really what's causing, buyers maybe to take a pause and not consider buying right now. Even though in the grand scheme of things and all
It's
things,
still a great time to buy.
it is. Interest rate's still low. I actually did a poll on my Facebook page asking for people to tell me when their first purchase was and what the interest rate was. And it was pretty eye-opening. Everybody's was...
Mine was 8.
Mine was like 7.25. I had an ARM as well, which is an adjustable rate mortgage. So just in the grand scheme of things, again, they were artificially low. Now we're a little higher. But yeah, one of the things that we've been looking at is that you are able to get some concessions from a seller these days. And something that's been a little creative that we're trying to do that we can consider for buyers is actually asking the buyer or the seller of the home to give you money concessions, and you use that money instead of for repairs of the house, but to help buy down a rate.
We have a program called Any Questions, Please Call Me, because every scenario is a little different, but there's a program called a 2-1 buy down, where the first 2 years you reduce your interest rate by 2%, then 1%, and then it goes to your note rate. So you have a savings for the first couple years that the seller actually contributes to. So it helps people get into homes. First-time home buyer program is still very, very competitive.
Right.
That's kind of amazing.
Yeah, they're back, right? It was back and forth for a while.
Yeah, I mean, they've been back depending on the credit score and all that fun stuff. But yeah. There's a lot of, they're more readily accepted when you're looking at multiple offers.
Correct. Because in the past, yes, we wouldn't have taken an FHA loan or first-time home buyer, any one of those type of programs. It wouldn't have been accepted in this hot market. But now it is. So if you're out there and you're thinking about buying, make sure to work with a good agent and a good lender who can use some creative solutions to help you with your interest rate.
And every scenario is different. So it's not a cookie cutter situation. Every family's different. Every credit score is different. Every goal is different. So yeah, call and happy to walk through it. No obligation. We can look at scenarios for you.
Just to clarify, I don't know if everyone understands, when we say buy down your interest rate, that means maybe the market interest rate's at 7.25 right now. For every point that you pay, that's 1% of your loan value, right, Jen?
Depends.
Okay, got it.
Every point in discount, well, on the 2-1 buy down, it would be 1%.
Okay.
But if you pay discount points, and that's probably another discussion.
Right.
But it's usually an eighth to a quarter of a point.
But it's 1% of the loan, and it brings it down a quarter.
1% of the cost of the loan.
Perfect. Okay.
Yes.
Yep. So, but it only brings it down.
Maybe an eighth to a quarter.
Yeah. So that just some education there. I mean, I know I was learning it as well as how much does that actually impact you, but maybe a seller can give you. It's up to 5 points is all you can do to buy
6
down.
points, depending on the loan amount.
Okay.
Or the loan program. Sorry.
Okay.
Yeah.
So it's cool. So you might be able to use a seller to help buy down some of your interest rate to help your payment. And that could be the whole entire life of your loan, or Jen was talking about the 2-in-1. So yeah. So anyway, let us know if you have any other questions, and we'll be back next week. Thanks.
Thanks, guys.